What's up, crypto fam? Welcome back to the Crypto Breakdown Whiteboard mini-series. In today's video, I'm going to teach you everything you need to know about Polygon, aka Matic. In part 1, I'm going to teach you guys all about the Polygon blockchain, TPS, supernets, validators, and why is everybody saying that Polygon is centralized. In part 2, I'm going to blow your mind when I show you Polygon's partnerships with some of the largest legacy brands in the world. Before making this video, I didn't even know about half of these. Then in part 3, we're going to do a deep dive into tokenomics price predictions, and we're going to figure out how much Matic you would need to own to become a millionaire by 2024. But before we dive deep, who wants to win $500 worth of Matic? I want you to go down in the comments and let me know where you think the price of Matic will be on April 1st of 2024. Whoever guesses right closest to the penny will win $500, and your guesses have to be in by January 1st. Whoever guesses closest to the penny is going to win $500 worth of Matic. So let's start with who founded Polygon. Polygon, which is formerly known as the Matic Network, was launched in October of 2017. Polygon was co-founded by Gennady Kanani, Sandeep Naul, and Arghran Arghan. And I apologize if I murdered those names. Before moving to the Matic network in 2019, the Polygon team was a huge contributor in the early stages of the Ethereum ecosystem. The team worked on implementing the Plasma MVP, Wallet Connect protocol, and the widely used Dagger event notification engine on Ethereum. Polygon's co-founder Gennady Kanani is a full-stack developer and blockchain engineer, and he currently serves as the CEO of Polygon. Jay played an integral role in the implementation of Web3, Plasma, and the Wallet Connect protocol on Ethereum. Prior to his involvement with blockchain, Jay worked as a data scientist at Housing.com. Co-founder and chief operating officer of Polygon, Sandeep Naul, is a blockchain programmer and entrepreneur. After studying computer science, Sandeep received his MBA from the National Institute of Industrial Engineering, aka NITI, one of the top schools in India, where he specialized in informational technology. Before jointly starting Polygon, formerly known as Matic, Sandeep had served as the CEO of Scopeweaver and the chief technical officer of the Wellspun Group. Anurag Arjun is the only non-programming co-founder of Polygon. He is also one of the first crypto billionaires from India. As a product manager, he has also had stints with the IRIS business, SNL Financial, Dexter Consultancy, and Cognizant Technologies. So now let's check out this amazing article on CoinDesk wrote by Robert Stevens called Polygon and Matic. What's the difference? So what is Matic? Over 2021, you may have seen the blockchain Polygon used in conjunction with the Matic network. This is because the Matic network was originally the name of Polygon before the project decided to rebrand in February 2021. The main source of confusion comes from the fact that Polygon decided to keep the ticker Matic for its native utility crypto token after they rebranded. This means that the two words are interchangeable. Polygon is to Matic as Ethereum is to ETH. As of today, there are 8.73 billion coins of Matic out in circulation. The rest of the coins will be minted by stakers who deposit their Matic crypto tokens into staking smart contracts in order to become a validator. The surging popularity of Ethereum in 2021, sparked by the bull run for NFTs, play-to-earn games, and decentralized finance protocols, sent the price of scaling solutions like Matic skyrocketing. Matic rose from 1.8 cents and a market capitalization of $81 million at the start of 2021 to a market cap of $20 billion, and it reached an all-time high of $2.92 on December 27th of 2021. Polygon is a proof-of-stake Layer 2 solution, which means that it is a piece of software that sits on top of blockchains known as Layer 1s. Other examples of Layer 2 solutions include Bitcoin's Lightning Network, which cuts the cost of Bitcoin transactions, and Loopring. To help you get a better visualization, I want you to picture Polygon like an express train at the subway station. The express train travels side by side with the local chain. They both travel the same route, but the express train just makes fewer stops and thus moves much faster than the local train. In this analogy, Ethereum is the Layer 1 blockchain, aka the local chain. In this example, Polygon is the Layer 2, aka the express train. Polygon uses a variety of technologies to create this speedy parallel blockchain and links it all to the main Ethereum blockchain. Polygon has big plans to expand beyond Ethereum and launch their own chain. It pitches its services as a framework for an internet of blockchains, which means it can connect any Ethereum interoperable blockchain together, and it can be used to cut transaction costs and increase speeds. However, Polygon is not the only product that attempts to take transactions on the Ethereum network to the next level. Now, the next question you should be asking yourself is, how is the Polygon network secured? To create new Matic tokens and secure the network, Polygon uses a proof-of-stake consensus mechanism, which means that the only way that you can earn Matic you hold is via staking. Validators are just like miners, except for the fact that they don't have to spend any money on electricity, and they pretty much never have to upgrade their equipment. And in order to run a validator, the investor is forced to buy coins of Matic. Unlike proof-of-work blockchains like Bitcoin, where investors can buy mining equipment with fiat and earn their share of the network rewards by putting what we call skin in the game. In proof-of-stake blockchains, validators do all the heavy lifting. They verify new transactions and they add them to the blockchain. In exchange, they receive a cut of the fees and the newly created Matic. According to Matic, becoming a validator is a commitment that requires running a full-time node computer and staking your own Matic. If you make an error or you act maliciously, or in the event that your internet starts to get glitchy, you could lose some of your staked Matic due to slashing penalties. Now, according to Matic's website, on September 27th of 2022, validator requirements are not yet set in stone. They said that, as they had mentioned earlier, that they are thinking of having a minimum self-staking requirement for the validators, as we do hope that validators also have their own skin in the game. However, since we will be moving to a robust replacement strategy, as the number of validator slots are limited as of now. Now, you also have another option, which is called delegation. Delegators can stake their Matic indirectly via a trusted validator. This is a much lower commitment version of staking, but it still requires some research. If the validator you pick acts maliciously or makes errors, you could lose some of your staked Matic. This would mean that as of now, Polygon is very centralized, and this might cause some legal issues in the future if they did an ICO. I will explain more about centralization part after we dive deep into the ICO and tokenomics. According to CoinCodex, the price of Polygon during the IEO was 0.2 of a penny per Matic. The Polygon token sale started on April 24th of 2019 and lasted until April 24th of 2019. And the sale concluded when they hit their max limit. Compared to its initial token sale price, Matic is currently showing an ROI of 280x against the US dollar. In my opinion, ICO and IEO would fall under the same regulatory scrutiny, but the SEC fails to provide regulatory clarity, so this is all just speculation. But just so you know, ICO stands for Initial Coin Offering, and IEO stands for an Initial Exchange Offering. Polygon conducted its IEO for the Matic token sale on the Binance Launchpad in April of 2019. It was the fourth token sale to take place on the Binance Launchpad, which quickly became the industry's leading platform for launching new tokens. Now let's talk about Polygon's token emissions. Private sale, 4%. Advisors, 4%. Network operations, which are controlled by the team, 12%. Team tokens, 16%. Investors, 19%. Foundation, which is also controlled by the team, 22%. And ecosystem, 23%. So if I had to take a guess, I would say that roughly 50 to 60% of all Matic tokens in one way or another are owned by the team or VC members, or were sold to the VCs or given to team members. Now, if we swing over to CryptoCarp and we search Polygon Rich List, we can see that Matic tokens are in 3 different ecosystems: Ethereum, Binance, and Polygon, not quite into Solana yet. In the Ethereum ecosystem, the top 100 wallets hold 95% of Matic tokens. In the Binance ecosystem, the top 100 wallets hold 82.57% of tokens. And in the Polygon ecosystem, the top 100 wallet addresses hold 86.79% of tokens. So what does that mean? In proof-of-stake blockchains, the amount of coins that you own dictates your voting power in the network. So if the figures above are correct, the top 100 holders control 85 to 95% of the voting power in the network. So that definitely makes things very centralized. On the flip side, there are 2 really good articles wrote by the Polygon team that address the concerns around centralization, and I'll leave links to those below. But I want to point out one more key factor about these validators. From the research that I've done, I can't find anything about who is running Polygon validators, which is pretty strange considering validators are the ones making all the network rewards. If we swing over to Messari and we look at this chart, we can see that staking rewards started around May 1st of 2020, and as of October 1st of 2022, validators have earned 692,054,004 coins of Matic. So if we assume that the only people that are running Polygon validators are team members or VCs, that would mean that if the current price of Matic is 75 cents today, that team members or VCs would have made $519,040,503 worth of Matic for running validators. Pretty crazy, right? On December 27th of 2021, the Polygon network put in an all-time high around $2.90. Around that same date, validators had been rewarded 497,926,364 coins of Matic, give or take. Those rewards on December 27th would have been worth $1,442,986,455. And that is exactly why Bitcoin maxis give proof-of-stake blockchains such a hard time when they try to convince retail investors that their blockchain is decentralized. On the flip side, if Polygon validators are as centralized as we think, this could be a huge win for Polygon. We just saw the SEC claim that they have jurisdiction over the Ethereum blockchain because 40% of Ethereum validators are running in the United States. Polygon can now use the opposite argument and fight the SEC if they ever try to charge Polygon for being a security. All Polygon has to do is make sure that they don't have any of their validators running in the United States. That could be a huge win for Polygon. Now let's recap that and talk about Polygon's partnerships, and this part is going to blow your mind. Then we'll finish up with some price predictions. When it comes to onboarding some of the largest legacy brands in the world, I don't think that there is a better blockchain than Polygon. This is what makes me think that a majority of the crypto space does not really care about decentralization. All they care about is making money, and Polygon has made a lot of people a lot of money. I know personally because I absolutely crushed it on my Polygon gains last bull run. In the sports world, Polygon onboarded DraftKings, one of the largest sports betting websites in the world. The NFL also used Polygon as NAB states. Through a partnership with Ticketmaster, the NFL launched virtual commemorative tickets that will be distributed to fans attending selected games on a complimentary basis. The NFL NFTs are created on the Polygon network. And last but not least would be Liverpool Football Club, also used Polygon to launch its own NFT collection. However, the product has been branded a disaster, and around 94% of NFTs remain unsold. In the fashion world, Polygon onboarded Dolce & Gabbana, who broke record sales for the highest fashion NFT sold, worth $6 million, via its partnerships with UXND. The release made its way into traditional fashion news cycles, with institutions such as Vogue covering the release, declaring it a $1 million success story. Macy's even joined the NFT revolution by launching its NFT of an infamous Thanksgiving Day parade. According to the Wall Street Journal, the retailer was auctioning off 10 digital images of a Thanksgiving parade balloons, including a float and firefighters from the 1940s. And last but not least was Adidas and Prada, who joined forces in January to launch an NFT collection on Polygon. Their Into the Metaverse project was designed to reward Adidas NFT holders with creator-owned art by digital artists such as Zach Lieberman. And this one really blew my mind. In the technology sector, Adobe has integrated Polygon into its artist profile application, Behance. Artists, creators, and developers who use Behance can show off their talents online to fans and potential collaborators. Behance has over 10 million users who now have an on-ramp to Web3 through Adobe and Polygon. NFTs minted on Polygon can display Behance with a link to OpenSea to reveal further information. And last but not least would be Facebook/Meta, who announced in May that it would be launching NFT integrations with Instagram. The platform was launched to a handful of influencers on Polygon, with Ethereum, Flow, and Solana to follow. The choice to launch solely on Polygon is a bold move for one of the world's largest companies. It further establishes Polygon as the go-to blockchain for traditional onboarding of legacy businesses from Web 2 into the Web 3 game. And in the finance sector, Stripe announced in April that it would begin testing USDC payments via Polygon to Twitter creators. Twitter users can earn money through events such as ticketed spaces, which they can then cash out via USDC instead of traditional banking methods. And last but not least, Polygon just announced a huge partnership with Disney and Starbucks. Pretty mind-blowing, right? We hear so many blockchains announce partnerships, and I think that 95% of those partnerships are complete BS. But Polygon partnerships are definitely the real deal. Everyone keeps asking me if I had to pick one proof-of-stake blockchain, who would it be? and I'm honestly starting to think that it might be Polygon. The only problem I really have with Polygon outside of its centralization is the fact that the coding language that's used to build the Polygon blockchain is Solidity. If you guys are new to crypto and you're not really in touch with the crypto space, you probably don't know that, but a majority of hacks that happen in the crypto space, and there was $14 billion last year alone, all pretty much point back to bad coding. Solidity is a super complex and extremely hard and old, outdated coding language. Hence the fact that some blockchains have triple audits and they still get hacked. Over the last year, the Kadena team has begun putting the final touches on a new smart contract coding language called Pact. If I had 30 extra minutes, I could explain it to you, but without a doubt, it will be the smart contract coding language of the future because of 3 simple facts. Number 1, it's in human readable code. Number 2, it uses formal verification, which means that the code can self-audit itself, making it 1 billion times safer to code than in Solidity. And last but not least would be number 3. Polygon's NFTs cannot enforce the resale of NFTs, and NFT artists are forced to use centralized platforms like OpenSea to buy, sell, and trade NFTs. So there is this probability that developers may no longer want to build on the Polygon ecosystem because of the major security risks. But I doubt that will happen before the next bull run, so that definitely means there's plenty of room to make some gains. So let's dive into these price predictions and find out exactly how much Matic you would need to own to become a millionaire by 2024. So as of today, the Polygon blockchain has released 8,734,317,475 coins of Matic out into circulation. The current price of Matic is 74 cents. If we take the circulating supply and we times that by the price, that gives us a market cap of $6,459,304,756. So if we swing back to Masari, we can see that by May 2nd of 2022, Polygon will have released 100% of their coins out into circulation. If the 2024 bull run lasts the exact same length as the 2020 bull run, we should expect that May 2nd of 2025 should be the exact date that the 2024 bull run ends. So if we are making long-term investments into Matic, we need to calculate in the inflation rate. If we do the math in reverse and we take the market cap, which is 6.5 billion, and we divide that by the max supply at 10 billion, we can see that the price of Matic would actually be 65 cents today if they had released all of their coins into circulation that will be released by 2025. So since we plan to take profits in the 2025 bull run, let's break down Matic tokenomics and see where the price of Matic might be by 2025. If you invested in Matic today, and we assume that the price is 65 cents and the market cap is 6.5 billion, for you to 2x on that investment and for the price of Matic to hit $1.30, the market cap would need to be 13 billion. For you to 10x on that investment and for the price of Matic to hit $6.50, the market cap would need to be $65 billion. For you to 20x on that investment and for the price of Matic to hit $13, the market cap would need to be 130 billion. And for you to 100x on that investment and for the price of Matic to hit $65, the market cap would need to be $650 billion. If Matic does a 10x and hits $6.50, 153,846 coins of Matic would be worth $1 million. If Matic does a 20x and hits $13, 76,923 coins of Matic would be worth $1 million. And if Matic does a 100x and hits $65,000, 15,384 coins would be worth $1 million. So if you want a shot at winning $500 worth of Matic, drop some comments below and let me know where you think the price of Matic will be at on April 1st of 2024. If you are new to crypto and you don't understand what drives up the price of a crypto asset, check out my Layer 1 blockchain supply versus demand video. Links down in the description, and it's also in my Kadena whiteboard mini series. So hopefully you guys really enjoyed this content. Again, my name's Ryan Mehta. Good vibes always, crypto fam, and I'll catch you guys in the next video.